Solid returns here, but the question needs to be asked. With stocks at an all-time high, concerns of sticky inflation and economic weakness, the impact of tariffs, take your pick. Just how sustainable are those levels of returns?
Well, I have to say this is a very strong quarter, and I'm personally quite surprised that markets have done so well. And in particular, the rebound we've had since April, I think it's very, very surprising given everything that's going on in the world.
It's surprising. And so, Nicolai, do you expect it to continue on? To your point, given everything that's going on in the world, just how resilient are we moving forward?
Well, we've been cautious for quite some time, and I think we really have to continue to be cautious. It's interesting because in Europe we have basically had no earnings growth in the first half, but we did have a lot of earnings growth coming out of the US, and in particular the US tech companies. So it's really the earnings growth is really driven from that part of the market. And then, of course, we've had very strong returns from the financial sector. And so it's been relatively broad within that area.
How does one even be and express that cautiousness in this environment, Nicolai? When bond volatility has continued to pick up, you see metals like gold subject to intraday fluctuations depending on what we hear from the White House regarding tariffs. How does one protect yourself in this more cautionary environment?
No, I think it's really an environment where you need to be very broadly diversified and very long-term in your investment horizon, because it's just like totally impossible to move around your portfolio, in particular when you are the size that we are, based on short-term movements. So the longer term you are and the more broadly diversified you are, I think the better you will cope with this situation.
Well, Nicolai, just given your passive exposure to U.S. stocks, I know this is no fault of your own, but one could definitely argue, maybe you're too exposed to tech. NVIDIA is your largest holding. Does that concern you at all?
Well, the thing is that you could have started to be concerned about this many years ago, and wow, would you have lost out on some huge gains, right? So I think the way we talked about diversification of the portfolio some years ago, where we thought that 1% of the portfolio was a huge holding, I think it's very good that we didn't limit the position size at that stage. Now, when we see what AI is doing to our firm and the way we work, it's just like incredible. We think that last year we increased our productivity by 15%. This year, I think we can increase it even more. We are just using it everywhere now, and it's just fascinating how it improves and makes our work more efficient.
How much is it just increasing efficiency, Nicolai, and also maybe meaning you need less staff?
Well, so for the moment, what we're saying is that, hey, we are not going to cut staff. We are just going to do more. We're going to be just much better at what we're doing. And our goal was always to be the number one player in using AI in our country and also within the financial sector. So we are not going to lay off any people. We are just going to do everything much better.
I'm sure everyone at Norges Bank is very happy to hear that, for those who are listening in, Nicolai. We're also at this moment, though, where these big tech and, yes, AI players are starting to be more subject to the politics. NVIDIA, AMD having to pay 15% of their China revenue to the U.S., China pushing back, saying don't use H20 chips, the Intel CEO going over to the White House. Does that change at all how you view some of these U.S. companies? The fact that they're getting caught more in the political crosshairs, not just abroad, but where I am in America as well?
Well, the thing is that it's like super interesting because the very close ties between technology and geopolitics. This is something that really exploded like 3 years ago with the advent of ChatGPT. Now, of course, you have AI being built into everything from self-driving cars, medical research, weapons, all these kind of things, right? So the link here between geopolitics and technology is just so strong and so important. So you need to just have a different lens when you analyze markets these days.
Have you hired more geopolitical analysts, Nicolai? How are you handling that?
Well, we try to do even more deep thinking than we did in the past. I think to really have a credible kind of resource center inside, you would need to hire at least 50 people. Well, we try to listen to the best experts worldwide. And then, of course, as I said at the beginning, to be widely diversified and have a very long-term view so that we really participate in this value creation.
How much of the diversification, Nicolai, is also looking away from the U.S.? Europe stocks gained the most in your portfolio, 17.8% versus just 1.4% for North American stocks. At this point, would you consider an even greater tilt towards Europe?
Well, there is a big currency effect in the results here. Because of the movements in the Norwegian kroner. We have more than half the portfolio in the US and then just under a third in Europe. And so we are really happy with the geographical diversification we have for the moment.
Well, it goes back to this question, Nicolai, and I know you've been asked it before to start the year, but it's not gone away. This idea that perhaps brand America has been hurt with the political volatility happening in the US. Do you think that that's a narrative that could get more legs, that at some point you might need to re-examine just how much of the US you hold?
Well, it's a very interesting question, of course, you're posing here. Uncertainty is generally not very good for stock markets, and it's not very good for companies. And so when we have uncertainty about tariffs and so on, that's not a positive. At the same time, we are seeing very, very strong developments, strong R&D, strong innovations, and so on coming out of the large US companies. So I would say we are really, really pleased with our holdings, and I feel we are in the right place.
When it comes to your holdings, Nicolai, you also recently divested from 11 Israeli companies. You cut ties with external managers from Israel, too. All of that amid pressure before an election happening there. Is there a real risk, though? And critics might look at this and say it opens the door to being used as the fund being used as a political tool. Is that a real risk?
Well, it's a very, very important question because it's important for us not to be political. We are an investment fund. We have one overriding goal, and it is to make money, of course, within the mandate we have from the ministry. Now, we divested from these Israeli companies, not because they were Israeli, but in this case, because we wanted to simplify the portfolio management we did in Israel. So these were companies which were not in the index, and we decided to take home the asset management. We discontinued 3 external relationships with external managers, and then we decided to do it ourselves, just to kind of simplify what we are doing and how we deal with this.
Are you evaluating at all changes to some of your responsible investment strategy as part of this, Nicolai?
Well, we are continuously evaluating this. We also have a separate entity called the Council of Ethics, which is looking into more ethical aspects of our investments. And then in terms of being invested in Israel, that's a political question. It's not a decision that we do. So what we do is to make sure that we invest in Israel in a responsible way.
Hey, Nicolai, we literally only have 1 minute left here, but it's going to be CPI reports in America. Are you gearing up for maybe a more stagflationary environment in what is your largest holding?
Well, we do see that there are some real inflationary pressures. I mean, one thing, it's of course coming from the tariffs. We are seeing some push from various kind of climate situations too, through worse harvests and raw material prices, which are moving up. And so that is why we also think that there is a link between climate risk and financial risk. I do think there is for sure a danger that inflation could be quite persistent here.